Speaking of capex and the heavy industries or the old economy space, let's pivot to one important set of earnings. And the company on our radar is Mazagon Dock. Now, Mazagon Dock had a weak start to the year. The higher expenses impacted profitability quite a bit. Margins saw a sharp fall as well. Let's talk about this and the outlook for the rest of the year. We have with us Mr. Biju George, Director Shipbuilding at Mazagon Dock Shipbuilders. Mr. George, thank you very much for joining in. So that's been the market's concern as well, right? Your subcontracting expenses were up 9%. Project expenses, moved up 3x. Provisions were much higher. Can you just explain to us if this is just a one-quarter hit? And what should be the normal expectation on margins for the coming quarters and for the year as a whole on EBITDA as well as EBITDA margins?
Yeah, so there has been a dip in the EBITDA this quarter. This is primarily owing to the fact that we had to make some conservative provisions for our ongoing projects where we have encountered a steep hike in the subcontracting rates as well as similar kind of hike in the equipment cost. These are all driven by boom of shipbuilding in the country as well as globally. Because the equipment manufacturers have already moved into a seller's market. So when we contracted these orders, it was a buyer's market. So therefore, that shift in the scenario. So we have given a kind of provisioning, and that is the reason why it has taken a hit. And there is no further anticipated provisioning in the quarters to come. So that kind of pressure is not anticipated in the... Yes.
So, sir, can you give us a trajectory to work with as margins start to normalize, maybe Q2 onwards? What will the recovery path look like? And for the year as a whole, what is the steady state margin expectation that your shareholders can have?
Yeah, so the margins like the year before, we hope to maintain same. The 15 to 20% margin is what we expect. Now, what is happening for the next couple of quarters, we would be on a path of recovery because our ONGC projects are seasonal. During monsoon, we are unable to execute it in offshore. So once the monsoon period is over, so the next 3 quarters, we expect a pickup of revenue from the ONGC projects as well.
All right. Hi, sir. Good morning. Good to see you. Ben, what about growth for the year? 8 to 10% is doable?
Yeah. So that's what I can give as guidance because currently our residual order book is approximately 30,000 crores. We are executing it. So this particular quarter we had to provision, as I said, that is the reason for this hit. But we are on the road to recover.
The current order book you said is 40,000, 50,000 crores?
No, around 29,000.
29,000. Okay, ballpark 30,000 crores. But there are a couple of other large orders that we were talking about the last time around, sir, that you were expecting. Could you tell us which project we could look at closing out this year in terms of an order inflow? And what could the quantum be?
Yeah, so as far as the future projects is concerned, we are serious contenders for 3 additional submarines and 6 75I submarines. So these are at the advanced stage of negotiations. We are awaiting government decision, which hopefully would be in our favor, and we expect that some kind of orders are going to materialize this financial year itself.
So just confirming, I believe in the investor call you've given a number. I'm just reconfirming the number that with all of these additional submarine contracts, your order book could touch 1,25,000 crores this year itself. Is that right?
See, that is, I would say, slightly speculative because we do not know which order is going to materialize and in what sequence. So if everything comes, of course, it will touch that figure. But at this point in time, I won't be able to commit that this is going to happen and this financial year it's going to happen.
Okay, so then let's work with where you have realistic timelines for bid awards to come through. So if not 1 lakh, what should we work with? I mean, you were at about, I think, 30,000 roughly is the order book position right now. Should we expect the order book to double? Would that be a more realistic assumption?
That would be realistic, but the order in hand is 30,000. In the next 4-5 years, it will have to be liquidated. By 29, the current order book has to be liquidated. So it will get progressively liquidated. And at the same time, we are in the process of, these are the anticipated orders. And we are also looking at warship projects also, apart from the submarines. That is the 7 follow-on 17 Bravo project. That is the frigate program. Then the next generation destroyers are also there. We are serious contenders for that as well.
Sir, and so that's on the order book front. Just give us a sense of the execution. Like for this quarter, you've had double-digit top-line growth. Expecting to do more of that? 15% revenue growth for this year?
Yeah, so in the current order book itself, we would be able to sustain that. So if new projects also come, the revenue recognition or booking will happen only after 2 years down the line, because after signing the contract for realization of the value of production on ground, it will take 2 years.
Okay, I guess we're done with the.
All right. just one more quick question, sir. In terms of exports, what is what is the potential that you're looking at in the years to come? It's still reasonably smallish, but that is some potential out there. So if you could tell us where do you see this number headed?
So,
and also in terms of breakup, repairs and, what is the segmental breakup, the ideal mix you'd like for the business on the whole, exports and business breakup?
Yeah, so we'll have to put it into 3 buckets. One is shipbuilding and the new construction for domestic consumption, like for Indian Navy and for Indian Coast Guard, ONGC, etc. Secondly is the export, and thirdly is the refit and repairs. So coming to the export, right now we have already contracted 6 ships for a Danish client that is progressing. And there is a lot of export potential. We are looking for further orders. We are in the process of discussion, but nothing, as of yet, nothing is crystallized. And coming to the repair vertical, we already have a repair vertical, but for doing in-house repairs, we have dedicated a dock for repairs where we are doing relatively small vessels around 120 meters long. That's what we can take in a dry docks. And that is clocking a revenue of approximately 100 to 120 crores per year. That's a minuscule revenue compared to our total revenues concerned.
All right.
And I would also like to mention that you are already aware we are acquiring controlling stakes in Colombo Dockyard, where their main business vertical is ship repairs. So on the ship repairs front, that revenue also will get consolidated into our portfolio as when Colombo Dockyard would become a subsidiary company to Mazagon Dock.
Okay, we wish you all the best of luck, sir. Thank you very much for joining us. Good speaking with you here on CNBC-TV18. We, by the way, had a really extensive, long interview with the shipping secretary a couple of weeks back. And lots of what you're saying, essentially, in terms of the pipeline of orders, etc., the secretary had sort of confirmed to us as well. Thanks once again.